Assalamualaikum and hi to madam and also the viewers. Today our group is going to present to you about Dutch Lady Milk Industry Company Sdn Berhad and also Nestle Malaysia Sdn Berhad about the company performance comparison. Our group member consists of Adib Shakir, me myself Amir Zarif, Afika Hani, Atalia Azri and also Nadia Kristina.
Dutch Lady Milk Industries Berhad, founded in 1963, is a leading dairy company in Malaysia. It offers products like UHT milk, milk powder and yogurt drinks. Owned mainly by a global dairy group, Friesland Campina, the company benefits from international experience. Dutch Lady is well-known for growing up milk and has recently invested in a modern factory. It focuses on nutrition, sustainability and helping local dairy farmers, earning a strong reputation in Malaysia for over 60 years. Nestle Malaysia Berhad, founded in 1912 as the Anglo-Swiss Condensed Milk Company in Penang, is one of the Malaysia's top food and beverages companies. Known for popular brands like Milo, Maggi and Nescafe, it offers over 500 halal-certified products and exports to many countries. Nestle Malaysia runs 6 factories nationwide and is known for its focus on sustainability, innovation and community support, making it a trusted and important part of a Malaysian economy.
Next, I will be presenting a comparison of the liquidity position of two major companies, the Dutch Lady Sdn Berhad and also the Nestle Malaysia Berhad. The analysis is based on two key liquidity metrics, the current ratio and the quick ratio. These ratios help assess a company's ability to meet its short-term obligations. Now, let's begin with the current ratio. The current ratio measures a company's ability to repay its short-term liabilities using all of its current assets. As we can see, Dutch Lady has a current ratio of 0.84 ratio to 1. And Nestle has a current ratio of 0.55 ratio to 1. This means for every RM1 of current liabilities, the Dutch Lady company has RM 0.84 of current assets, while Nestle has only RM 0.55. This indicates that Dutch Lady is in a stronger position to meet its short-term obligations. Moving on, we will look at the quick ratio, which will provide a more conservative measure by excluding the inventory and prepayments. As we can see from the slide, Dutch Lady's company's quick ratio is at 0.36, while for the Nestle companies, their quick ratio is even lower than that, which is at 0.20. This means that without selling inventory, the Dutch Lady company has RM 0.36 in liquid assets for every RM running of liabilities, while Nestle companies has only just RM 0.20. Again, Dutch Lady is in a better position in terms of immediate liquidity. From this comparison alone, it is clear that Dutch Lady has a stronger liquidity than Nestle Malaysia. Both companies have ratios below 1, which may suggest some short-term liquidity concerns. However, Dutch Lady's relatively higher ratios show it is more capable of covering liabilities with its existing assets, especially in urgent situations. In conclusion, while both Dutch Lady and Nestle show below optimal liquidity levels, Dutch Lady outperforms Nestle in both key liquidity ratios. This could indicate more prudent short-term financial management by Dutch Lady or possibly lower exposure to short-term debts. Thank you.
Profitability ratios. Profitability ratios are financial metrics used to assess a company's ability to generate profits relative to its sales, assets, or capital. They help us evaluate a business performance during the period under review. External users, especially potential investors, are very concerned with these ratios as they want to measure the return of investment of the business. So, in profitability ratio, higher profitability ratios indicate better performance. Starting with gross profit margin, Dutch Lady Sdn Berhad demonstrates a higher gross profit margin of 33.77% compared to 30.28% for Nestle Berhad. A higher gross profit margin indicates that Dutch Lady is more efficient in producing its goods or services, earning more profit per unit of sales before accounting for other expenses. Moving on to net profit margin. Net profit margin shows how much net income a company earns from every ringgit of sales after all expenses are deducted. In this case, Nestle Berhad has a net profit margin of 6.73%, while Dutch Lady's is 6.68%. Although Nestle's margin is slightly higher, the difference is minimal. This suggests that both companies are similarly efficient at turning sales into net profit after accounting for all expenses. Next, we have return on capital employed. Nestle Berhad reports a ROCE of 49.43%, significantly higher than Dutch Lady Milk Industries Berhad, which is 22.91%. This indicates that Nestle Berhad is generating much greater returns from the capital it employs in the business, reflecting superior efficiency in utilizing its resources. Lastly, let's look at return on assets. Dutch Lady Milk Industries Berhad records a ROA of only 9%, whereas Nestle Berhad achieves a much higher ROA of 11.48%. This implies that Nestle Berhad is more effective at using its assets to generate earnings, highlighting better asset utilization. In conclusion, Dutch Lady leads in gross profit margin, indicating a stronger control over production and direct costs. However, Nestle Berhad outperforms Dutch Lady Milk Industries Berhad in most key profitability measures. This suggests that Nestle is currently operating with greater overall efficiency in managing its overall costs, capital, and assets to generate profit.
Inventory turnover show the frequency of the company to restock their items in the accounting period. Hence, Dash Lady show the higher frequency of restocking with 4 times in the accounting period compared to Nestle with only 1 times in the accounting period. Average collection period shows the ability of the company to collect its debt throughout the accounting period. Dash Lady shows higher earlier collection dates with 6 to 7 days compared to Nestle, which collect its debt within 22 days. Total asset turnover shows the ability of the company to generate revenue based on RM1 of the asset. Nestle shows the higher ratio of generating revenue compared to Dash Lady. Nestle can generate revenue RM1.72 based on RM1 of the asset, while Dash Lady can generate revenue of RM1.43 compared to RM1 of the asset.
Okay, we continue to the leverage ratio, which is firstly the debt ratio. Nestle had a higher debt ratio of 85.01% compared to Dash Lady, which is 53.82%, indicating that Nestle relies more heavily on debt to finance its asset. The second part of leverage ratio is the debt to equity ratio, which is Nestle's debt to equity ratio is extremely high at 1,159.71% versus Dash Lady's is 116.56%. This shows that Nestle is significantly more leveraged and has a much higher financial risk. Lastly, we have time to interest earn, which is Dash Lady is able to cover more interest expenses, in more comfort, which is 19.56 times compared to Nestle is 8.49 times. This reflects a stronger interest coverage and lower risk of default.
In terms of financial health, Nestle shows strong profitability with higher returns on capital and assets. However, it faces some liquidity challenges as it has higher debt, which raises its financial risk. Dash Lady, on the other hand, has better short-term stability, manages its inventory and receivables more efficiently, and carries less debt, making it financially safer. As a potential investor, I would choose Dash Lady Milk Industries Berhad. While both companies are financially solid, Dash Lady offers a more balanced and stable financial position. It has stronger liquidity, efficient operation, and lower leverage indicates lower financial risk, which is important for long-term investment stability. Additionally, its investment in modern facilities and support for local dairy development shows a strong foundation for future growth. Although Nestle offers higher returns, its heavy reliance on debt may expose it to higher financial vulnerability, especially in uncertain market conditions.